Alrighty, welcome back to video 2, where I'm documenting my trading journal in a video form and seeing how it manifests out. So last week Thursday, we discussed how the S&P 500, we had a bullish stance on the S&P 500, but we weren't taking any action yet because we were waiting for a pullback around the Friday or Monday. And now, as we can see, that is kind of manifesting into reality. So today's video, we're going to discuss how we had that thesis, why we had that thesis, and do we buy the dip? Is the economy going to crash another 20% from here? Earlier today, I saw a hedge fund manager saying that we're going to crash 20% in the next week and a half. So let's discuss, is that possible? Is that viable? Do we buy the dip? And then also, how did we know that there was most likely going to be a further pullback? So let's discuss that. So, discussing why we believe that the market was going to pull back and we wanted to stay out of the market for a little bit longer. There's two main factors for this. Your first factor is one of our favorite tools that we use, is your seasonals. So if we look at the seasonality, on that Thursday, we were going into a period of weakness till the 31st, which was one reason why we were cautious of entering into the longs. This is just a chart that represents relative strength. So a higher low is not necessarily protection from not making a new low, because this is just a relative strength index for seasonality. And our second reason for waiting before we enter into the market was we knew JP Morgan have their famous collar trade that they put in March, where they have this giant order at 556, which would create kind of a magnet pullback because we bounced higher than this. And this expiration date is on the 31st of March, which is today. So we knew there was kind of a magnet to try inflict max pain on these positions. Good news is, normally with about 68% probability, this favors a bull market, a bullish stance after expiration. Other than the JP Morgan collar trade ending, supporting a more bullish stance after the 31st is if you look at the April seasonality and break it down into the post-election years. As we can see, April is a pretty favorable month, with the Dow Jones, it being ranked number 2 strongest month, and for the S&P 500, also ranked the second strongest month. And for the NASDAQ, out of the last 75 years, in post-election years, we've had 10 years have a positive April and only 3 with a negative April. So the supporting last video where we discussed that in post-election years, in your second quarter, you're looking for a strong reaction in your tech stock sector. So it's more of a risk-on quarter, strong quarter that we're looking at, which is going to support our bullish stance further. Alrighty, so now that we've discussed our framework of why we have this bullish stance on the S&P 500 and other assets like the NASDAQ, Dow Jones, Tesla, and so on, these are the levels we're looking at for the week based on the option contracts. So if you wanted to see more of my trades in real time, I learned the lesson that it's quite hard because I don't upload these videos all the time. So it's hard to adapt to like trading when you should be trading and just trading to make the video. Follow me on X. As you can see earlier today, I posted about buying the dip, and this is the levels we were looking at. And since then, we've had a nice reaction based on these ranges. So I'm looking to buy the dip at 545 and then maybe scale into my order at 538, and then my stop loss will be underneath this hedge zone range. Other than the equities market, let's go over the commodities. We did take our first trade and our first loss on gold, which is fine. I'm happy with it. Gold is overextended here, and I would have taken that trade again. It was A+ going into seasonality, and I do believe the rollover is coming. This is pretty overextended. So when this starts rolling over more, we'll maybe re-enter it. But for now, we have taken our first loss, and our account is on 98,400, which is fine. There's going to be many losses on this trading journey, and many wins. So it's kind of suitable that you lose your first trade where you try to go public with your journal. So I do think gold is going to roll over, maybe even rolling over today. As you know how they love to have the London high of day. I'm personally just going to stay out of this for a little bit because we did take that loss and rather wait for a bigger drop to manifest and then catch it on the pullback. I do think commodities in general, if you see copper, yeah, this is the area to short. Copper's just rolling over. Silver's rolling over. I do think commodities in general are rolling over. And the factor for that is, we'll just quickly look over what we looked at last week, is that the US goods trade balance just went through the roof because of the tariff uncertainties, and the front running of storing inventory just got a little bit excessive. If we look at copper, the inventory just went absolutely wild. Same thing happened on gold. And for this reasoning, I think most of the upside is done in commodities for a little bit. I still think they continue up later in this year. But looking for shorting commodities is probably my favorable outlook, and longing equities going into April. So yeah, until next video, thank you everyone for watching. All 60 of you, wow, first video. Like, comment if you want me to go over anything else. I also am very, very deep into the crypto game. I've been 6 years in that game. So if you want me to go into more of the crypto markets or any assets in specific, just let me know in the comments and I can go over them and look at them. Yeah, for today, we're not going to put any trades on, as we're waiting for our levels, and also just waiting for those tariff announcements on the 2nd of April. So there's more certainty in the market that we can play the direction in. Anyways, have a lovely rest of the day, week of trading, everybody, and I'll catch you in the next video.